Welcome back. This is Retirement News Online. Most investors are not so great at managing risk. They seem to sell when they should buy and buy when they should sell. And as you get older, this behavior can be detrimental to your retirement. Now, to get better results, you need to learn how to manage risk successfully. Joining me is Dariusz Godlewski. He's president of Financial Wealth Alliance in Chicago. And Dariusz, with regards to market risk exposure, how should a portfolio evolve as we get closer to retirement?
Yeah, well, it would have to evolve from accumulation phase to distribution phase. Obviously, if someone's getting closer to retired, retirement is all about distribution of their assets. So from accumulation to distribution, we approach this in kind of unique way. We would approach of three buckets of money: cash, income, and growth. And also, what's very important is proper asset diversification. So a lot of people don't understand that. They think they're diversified because, let's say, they have different stocks, different mutual funds, but we all know that most of the mutual funds, top holdings in those mutual funds are usually the same stocks like Facebook, Apple, Amazon. So there's a lot of overlap. So they're not really diversified, and stocks are only one asset class. Okay, bonds are a different asset class. Bonds are not very attractive at this point, so we don't deal with bonds at this point too much. But there's so many different asset classes that they react completely different in the same time frame and the same market. So diversification across different asset classes is very important.
Now, besides market risk, what other types of risk should we be aware of right now?
Well, especially right now, it's a tax rate risk. Obviously, taxes are going up officially, and eventually in the next 5, 10, 20 years, about 50% of all the printed money in the United States was printed in only last 12 months. So that will cause tax rates to go up, and retirees, they have to protect themselves against especially tax rate risk. Obviously, volatility of the stock market is always an issue. So we have a very unique way of dealing with that.
And the goal in retirement planning is to maintain lifestyle and not run out of money. How do you ensure that outcome with your clients?
Well, we have to allocate their assets into three different buckets: emergency cash bucket, income bucket, which is very, very important. A lot of people don't understand that that's basically the most important bucket in retirement. And the third bucket is growth bucket. It could be more aggressive, but the income bucket is very important. We have to diversify over a few different strategies, income strategies, that will give a client steady income, hopefully guaranteed income, and hopefully inflation-adjusted income, because obviously inflation is the huge topic right now for the near future, and so it has to be inflation-adjusted too.
My guest has been Dariusz Godlewski in Chicago, and this is Retirement News Online. Thank you for watching.